Thanks for tuning into the Trade Setup. I'm Neeraj Shah. Good morning. Let's get in the global news flow first. The cues are benign. Mortgage rates as well as yields, but mortgage rates in particular in the US have fallen for the first time in 2 months. Yields are below the 4.7 mark. Asian stocks have risen. Apple shares miss, hits the US futures for the day. Apple has posted the fourth straight sales drop, which is the longest slump since 2001. But I must say, Apple in India has posted its record numbers. And the Capital Group, one of the largest global investors, sees a window for stock buying on the Fed rate signal. Now, is that plus the bullishness in general led to the US markets having a fantastic day? Over 1.5%, nearly 2% for all the key benchmarks. Very strong show for the US markets, I must say. So that's the part one of the US markets, and the yields that I was speaking about, 4.67. So below the 4.7 mark. Volatility is okay, dollar index is okay, no big changes there. But from a risk asset perspective, the yield coming off is good news. Asian markets largely were higher. I reckon Gift Nifty should be indicating a start higher. Don't quite know what it would be indicating. I mean, usually this Gift Nifty is now not quite given the right indication, if you will. But yes, the cues are positive. Now, I'll tell you one more reason why the cues are positive before we get to the trade setup. Just look at the week-to-date performance for the global US markets and then compare it to India. 1 week gains. This is this week. By the way, it's not 1 week gains. It is this week gains, which is the 4-day gain. Dow 4.38%, S&P 500 4.86%, Nasdaq 5%, the Nifty 0.45. Yes, you could argue that the preceding this previous week, the gains would definitely be different. But the point I'm trying to make is this week, when there has been a bit of a pivot, if you will, in Fed's commentary, which a lot of people consider decisive, the global markets and the US markets in particular have rallied. India hasn't had that strong a rally. We have to accept that we are still in that bit of a fear zone, and maybe there are reasons, maybe crude prices being higher, geopolitics, what have you, elections around the corner, all of that. The reasons are always there for the markets doing what they are doing, but just the numbers look stacked in favor of the bulls. If the bulls want to make an argument that there is a chance for the index to move higher, the problem for that is what I'm highlighting in the trade setup today. The 19,200 to 300 zone is a key hurdle. 200 from an options perspective, heavy call writing at that level. 250 to 300 from a technical perspective. Most notes that I read speak about how that seems to be a key resistance level. But remember, if we cross that, then there could be some bit of short covering in the 19,200 calls, which may actually help the index move even further. Now, mind you, yesterday or day before, I mentioned that real estate has rallied so much it might take a breather. This index continues to march higher amidst all overbought skepticism, and which is why I'm saying at times it's foolhardy or a monk's game to try and predict what the markets will do, what specific indices will do. I laid it out on the basis of my conversations with a few technical experts. Very strong rally. Could it be overbought? Yesterday it rallied 2.5% further. I think in the last 8-9 days, the real estate index must have rallied over 10%. But there are fundamental reasons, because you see what's happening to real estate sales and estimates for sales from across all experts. So very strong show, continues to march higher. I mean, at some point of time, gravity would beckon. Trees don't grow to the sky, but for now, it's doing okay. Metals recover a little bit, but still out of favor from whatever little I hear. The one space which is finding a lot of favor from most institutional investors is power and power-related pockets. So watch out for that. Just the quantum of power capacity addition that might be needed to reach green goals, to reach power self-sufficiency in a year where we'll see significant power deficit is power. So watch out for that. Now, big day for results. Why do I say that? Not because of index, because it's only Titan per se, but a lot of very important names. Aeroflex, big IPO, big subscription, not a big IPO, but very heavy subscription. Important to see what it delivers. Interglobe, especially in light of the fact that not only have they had engine issues, but because of the fact that crude prices have inched higher and therefore the costs might be trending higher. Zomato, is this the first quarter where Zomato sees the impact of that 2 rupees or 3 rupees delivery charges or from the customer that they are starting to take now. Is this the first quarter important? JSW Infra, such a big bang IPO. Let's see if it delivers. Gujarat Fluoro, after Naveen Fluorin's disappointment, can Gujarat Fluoro actually do well? Remains to be seen. Patel Engineering, a lot of HNI investors there. Can it deliver? Let's see. Shakti Pumps has had a massive rally because of order wins. Can the quarterly numbers speak for that? Let's see. So a lot of stocks which very important results because of the rallies that they've had stand out today. Now stocks to monitor today. Tata Motors straight off the bat, the numbers seem okay. I mean, largely relative to Bloomberg estimates. The only one where they beat is margins, but margins was an exceptional beat across verticals. I mean, JLR, passenger vehicle segment, commercial vehicle segment. They beat margins. For JLR, they've guided to higher margins, and which is why most brokerages seem to be a bit more sanguine on Tata Motors. So do watch out for that one. I was looking at both CLSA as well as Morgan Stanley, they all said that the numbers look okay and they would be constructive on Tata Motors. I'm just trying to pull out the note if I can very quickly, just to tell you. So Morgan Stanley, they say it's an impressive quarter. The deleveraging in FY24 and the EV scale up in FY25 are all positive cues, I presume. The net debt has come off. JLR margin guidance is good, and the sharper than expected global luxury slowdown is the key downside risk to watch. They have an overweight rating with a target price of 711. Jefferies is a buy with a target price of 800. CLS is a buy with a target price of 803. So brokerage is largely constructive on Tata Motors. Some weak names after that. Tattvachintan Pharma, Q2 revenues at 96, expectation was 118. EBITDA 20 crores, expectation was 22.5. Margins at 20.9. There they've beaten estimates because the EBITDA growth, as you can see, 81% uptick, much stronger than the revenue growth uptick of 7%, which is why margins are looking okay. But because revenues missed the numbers quite significantly, 20 odd percent missed there, right? As a result of which profit also missed 7.8 crores versus 11.45 crores. So I reckon the street might just be disappointed with the revenue miss in Tattvachintan. Let's wait and watch. In fact, for NOSIL, no line items looked okay. Revenues down, margins down, PAT down. So not a great show by NOSIL. Link Pens or Link, revenues up 3.3% merely, but margins off, PAT down, could react. Sheela Foam, revenues down, margins down, PAT down, again could react. So a few names which look slightly wobbly in trade or in terms of results reportage. Now the numbers which look good. Ratnamani Metals and Tubes, it's just an exceptional beat relative to estimates. So revenues up 25%, but at 1131 crores, the estimates were 618. Quite something, right? Margins at 21.6, estimates 20.8. PAT up 66% at 164 crores. The estimates were 62 crores. Exceptional beat by Ratnamani Metals and Tubes. Watch out for this one. Watch out for JK Lakshmi Cement. Revenues up 14%. Margins at 13.8 versus 11.9. PAT up 43% at 45 crores versus 31.5 crores. Pratap Snacks, revenues down 5.2%. The Bloomberg estimates were 384 crores though, and they've delivered 433 crores. Margins at 8.7% versus 4.8%. The estimates were 7.8. Again, a beat there, as a result of which PAT at 16.5 crores, much higher than the Bloomberg estimates of 10.5 crores. Good set of numbers. You could argue that the revenue was lower, but revenue was better than what was estimated. Maybe the stock reacts. Chamanlal Setia, revenues up, margins up, PAT up 30%, a good set of numbers. Chemplast Sanmar, revenues were down 17%, but better than estimates. Like estimates were 962, so just about in line. You would argue that on that base, but margins at 4.7 versus estimated 3.7. The estimate was a loss. The reported number is a profit. The numbers look bad, but they are better than estimates. So maybe, who knows, the street might just find some favor there. So watch out for this one as well. Now, some other key things for which I haven't given graphics, but I just want to lay it out for you. On Dr. Lal PathLabs, Goldman Sachs has a sell, target price 2150, but UBS buy and a target price raised to 2950. And a Citi has a sell with a target price of 2290. So multiple different views coming out of Dr. Lal PathLabs after their numbers. So that is one stock to monitor today. On Tata Steel, most people have a sell. I think Citi has a sell, the downgrade. The target price has been cut to 100 from 140. And I think I saw a couple of other brokerages also not quite sanguine on Tata Steel. So that's the other one to monitor. And I'm sure I missed some numbers. Let me just quickly get them for you if I can. In case I've spoken about JK Lakshmi Shore, PSP projects, it beat estimates. Sales were at 620 versus 360 crores. EBITDA at 73 versus 39 crores. So PSP projects, good set of numbers. Tilak Nagar Industries, 354 versus 274. PAT 37 crores versus 14 crores. So that seems to be a good set of numbers. Concor had margin expansion. Maybe that reacts a little bit. So let's wait and watch. Watch out for these 2 or 3 names. I think they kind of stood out for me. SBI numbers tomorrow, so that is very important, of course. There are a few which you've got to keep in mind. Nevertheless, that's the long and short of the trade setup today. Clutch of very important conversations on talking point. Ravi Dharam, of course. First, the big one, worldview. JP Morgan on 26th October upgraded India to an overweight. The author of that note, Pedro Martins Jr., he's the chief EM equity strategist. He's also the head of LATAM equity research at JP Morgan. Joins us at 9 a.m. today. You will hear that conversation on worldview on BQ Prime. This is a very important conversation. You don't want to miss this. So that's at 9 a.m. Equally important to my mind from looking at what's happening in India, Ravi Dharamshi, CIO of ValueQuest Investment Advisors. He manages over 10,000 crores now. A very astute name, clutch of spaces. Lovely to talk to him today. So watch out for that conversation. Stocks in focus, Sapphire Foods, Sanjay Purohit, Johnson at 11, and Thomas Cook with all the gains that travel companies are making, Madhavan Menon Johnson at 11:15. So watch out for those 2 conversations. And of course, the FNO show as well as the 8:30 trade talk segment continue as they always do. Thanks so much for tuning into the trade setup. Must say, this must be one of the last days that we're doing the trade setup in this format. Our TV channel launches in a few weeks from now. We move to our new studios starting Monday. Catch me on trade setup from our new studios starting Monday. It's been a pleasure bringing it to you from the comforts of my home, but now we get to the swankiness our studios bring starting Monday. Thanks so much for tuning into Trade Setup all this while. Hope you continue doing that.